Good evening, everyone. Time for another silver update. This is the 1 hour chart of silver provided by Burning.down.now. You can click on the link below. I've drawn a couple of trend lines in here. It's hard to draw these lines because we have a lot of spike downs. The top one seems to be the primary one with a breakdown below that. You can actually probably draw that even tighter, something like this. Nevertheless, we're beginning to break down or roll over. We've had these violent fluctuations, roughly $1. As I pointed out before, if we saw the type of percentage moves in the Dow that we see in silver, then the public would be up in arms, but no one pays any attention to silver. Nevertheless, it looks like we're starting to roll over. You can see that the MACD is rolling over down below the zero line. So is that going to portend quite a bit lower prices? Well, you tell me. I don't know. I just cover it on a day-by-day basis. But we seem to be rolling over and have failed that attempt at 35. You can see the resistance line I've drawn here from the last top. We just kind of touched it, and now we're turning down. So it remains to be seen where we're going to go. What are going to be the support points? Obviously here, and then somewhere down in here if we do challenge those. So again, we'll wait and see where we go, but let's get over to the questions of the night. I was going to do an extended topic tonight, but once I went through the questions, I saw that they were so good that I want to go through each one of them and spend some time with that. So the first one is from Mark G, and this is NUMI silver compression versus gold NUMI. Hi, thanks for the tip about clicking through the Amazon link to help support your site. I bought hundreds of dollars off Amazon via your link this weekend and will in the future. My question, when did gold NUMIs start to compress percentage-wise? Having mainly all silver semi-NUMIs, I'm hoping to zone in on when to sell the NUMIs and rebuy cheap rounds. I wonder if the comparison to gold can help out. Also, what is your personal favorite coin in your collection? Thanks, Mark. Well, I haven't done a lot of study into gold numismatics, and that's a very good question. I think that you're going to find that the compression on gold is already there, considering that you're talking about $1,700 or so for a 1 ounce coin with gold. Percentage wise, it's not going to be that much. Of course, dollar wise, it's going to be quite a bit, $20 or $30. But I do not play gold for a numismatic play. I don't really see the sort of interest in gold, and we'll see that when we get down to some of the numbers, especially on the next question. But I don't see the same sort of interest with gold as far as numismatics. Gold is already at a high enough price that there's enough compression that really the main concern with gold is going to be, are you not buying a counterfeit round? And again, one of the big advantages of the government mints, that's going to be primarily, but not exclusively, the United States, Canada, and Australia. The gold and silver eagles have a dollar value attached to them, and that means that they actually are currency according to the laws. And because of that, people who go and counterfeit gold and silver eagles are not just looking at a potential lawsuit or fraud, but they're actually going to be facing down the Secret Service, and those are not people that you want to tangle with. So that's a big advantage for the U.S. gold and silver eagles, but for me, the semi-NUMI premium is going to be much more important when we're talking about silver. Next question is about the U.S. mint sales, and we talked about that in the last question, and this is from Wolf, U.S. Mint sales. Hi, Brother John. I'll keep this one short, and thanks again for all you do. What happened to U.S. Mint sales of gold in 2000? They fell off a cliff and still have not reached those levels. So you can see here, here's a history of the gold Eagle sales, and then you have a history of the silver Eagle sales. So if you look at the gold sales now, the year 2012 is not complete, so December is a big month, a really big month. So we might come near that 1 million figure, but you can see that gold has been decreasing. You had massive interest in 98 and 99, and then a huge drop off in 2000. Well, that's not surprising. There was a huge liquidity crunch with the dot-com crash, and not a lot of people had a lot of money. That also tells you that people really aren't saving in real savings. They're playing a lot of paper games. But when we go down here and look at the Silver Eagle sales, you can see that they started off with 3, 4, 9, 8, 10, 9, 9, 9, 8, 10, 9. And then in 2008, when we had the big smackdown, we jumped up and doubled to 19. And you can see we've never really turned back. We got 28 million, 34 million, 39 million, and this year I think there's a good chance that we'll actually come very close to that figure. So Silver Eagle sales have far surpassed the interest of gold Eagle sales. Now, it's not quite that 50 to 1 ratio. If we pick 2011, you can see it's about a 40 to 1 ratio there. But that's very important, as Eric Sprott always points out. You have nearly the same amount of dollars going into silver as you have going into gold. Eventually, that is going to have to resolve to the upside for silver. Next question, dollar strength due to deleveraging. I want to go back, though, to the first question. I didn't answer that personal favorite, and I pulled that up here. That's going to be, by far, the 2010 Australian Year of the Tiger coin. Now, I have a lot of personal reasons for liking that, as far as how it involves the rise of Asia and a lot of interesting religious symbolism. But by far, I believe, if you look at this coin, this is probably my favorite as far as artistic interpretation. And you can see this is from Gainesville. They don't have any in APMEX. This is $85. Now I'll show you exactly where I picked that up. I picked it up on the dip down to 25. It might even not show up very well on this chart. We're going to try to find it on the daily. It was when we had a little blip down to 25 from 30. That's right here. And this is where I picked up my silver tigers. I paid about $30 when the price was around 25. So I paid about a 20% premium on those coins, and I wish I would have at this point mortgaged my house and my cars and everything else to buy those coins. But that's by far my favorite. So let's get back to the questions. And the next question is dollar strength due to deleveraging private debt. This is from Silver Passion. I'm having trouble understanding the view from Harry Dent regarding gold and silver prices falling because the dollar will strengthen. From what I understand, he says PMs will rise initially in 2013, but will then fall because as private debt begins to deleverage or be paid down, the dollars will be destroyed, becoming scarce, and when things are scarce, their value goes up. When people debate Mr. Dent, they usually bring up the fact that we are no longer on a gold standard, or that comparing U.S. with Japan is like apples to oranges, but I don't hear them talk about the dollar becoming more valuable. Any comments you have will be much appreciated. Well, Harry Dent is like Robert Prechter or Martin Weiss. These are your deflationist people. They've sung the deflationist song for decades. I covered that in the video where I covered Gary North exposing the failure of the Weiss crowd to understand inflation. So I think these people are dead wrong. At some point, yes, the dollar may strengthen. I don't think that's going to be now. If we jump over and look at the dollar index chart, it seems to me that we have a pretty serious rounding down in the dollar index, and it looks like we're going lower. But you have to remember, with these currencies, this is all just a gigantic charade. The Federal Reserve is involved with strong-arming other governments to make sure that they devalue their currency as fast or faster than we devalue our currency. The latest one, of course, is the Japanese yen, and I've covered in the past how the central banks have encouraged the Central Bank of Japan to print up a whole bunch of yen to strengthen the dollar. So these are all relative. I think the analogy that has been used is it's like 3 or 4 people jumping off a building, and they're comparing themselves as far as who's going to hit the ground first, and the guy that's in 4th place feels a lot better because he's going to hit the ground after the rest of them. So they're all falling to the ground. They're all going to go splat. So it's not really a matter of making yourself look better by comparison. That's all just illusion. Ultimately, these paper currencies are going to go to zero. And next question, coin premiums. Hi, Brother John. I've been following your videos with great interest for the past year or so. I believe, as you do, based on world events, that investing in silver is a no-brainer. I believe that you advocate holding silver till the present fiat US dollar crashes and we enter into the next monetary system. I guess if we follow this belief, it would be advantageous to purchase as much silver as possible for that eventuality. This would favor a pure bullion coin over a semi-numismatic coin. Rational thought tells me to buy low-premium coins to save as much silver as possible, but I find myself weak in the knees with some of the beautiful semis that come around, such as the Perth Mint products. I buy these at times when I can get a good deal. I know you like some of the semi-numismatic coins, but wouldn't it be worth losing the premium if we have a long-term approach, new monetary system to stacking? Currently, the premium on some of these coins seems to be in the 12 to 15% range. Can we expect these types of premiums when silver gets much higher in the triple digits? Thanks for all the work that you do, Dreamer. Well, again, the Tiger, and that's one of my favorites. You can see it's going for $85 on Gainesville. I don't know if you can buy it on eBay for cheaper. You might be able to get it for cheaper on eBay. But you can see that these semi-numies tend to hold their value. Again, as I've pointed out many times, the Perth Mint are my absolute favorites. One of the big reasons, actually, is because of the plastic container. Every single Perth Mint coin comes in that protected plastic container, and you get rolls of plastic coins. Now, that may not seem that important, but if you're a person who values numismatics, it's actually very important, because these coins don't clang against each other, they don't scratch each other, and if you're going to at some point maybe get them graded, perhaps with PCGS or NGC or one of the grading services, it's highly likely that one of those coins you just have in the simple plastic is an MS-70. It's quite possible, so who knows, but I really like the Perth, and I'm looking for more Perth in the future. And the last question, 15-year-old stacker question. Actually, I'm going to take one more after that. This is from the Silver Cowboy. 15-year-old stacker question. Hey brother John F. I'm 15 years old. I'm new to stacking, but I've been watching your videos for a long time. I have about 100 ounces of silver currently. You know what? Good for you. I think that you're going to be shocked when you find out what that's worth in the future. And I'm earning about $1,500 a month through my small business, and I'm wondering how much time I have left to buy silver at these prices. I know you're not a registered financial advisor, but can you please give me some advice for my situation? Well, I can't give financial advice, but I would give lifestyle advice. And the best advice I can give you now is that you should do everything that you can do to live below your means. If you're 15 years old, I can't imagine that you really have too much of a cost of overhead at all. So you have a unique opportunity. Honestly, to tell you the truth, I don't think you'll ever see this opportunity again in your lifetime. So you have an opportunity to stack physical silver at a suppressed price. The central bankers and the silver suppressors are handing you a gift that very few people will ever see in their lives. So I would do everything I could do to take advantage of that. And last question on technical analysis. This is from JLogin Now. Hello, brother John F. I recently just donated $33.44, the equivalent of 1 ounce of silver, to your site. Thanks for that. And I really appreciate the people that have donated to the site. It's more a labor of love than anything else. I'll just leave it at that. I did so because I'm a longtime follower and want to thank you for the great info you share. The info is well worth a donation, and I hope you carry on with the channel. My question is, how does one learn technical analysis? I bought and read Market Wizards, Jim Rogers, Motorcycle Investor, and Reminiscences of a Stock Operator. Also have picked up 2 Life Straws. I read through Jesse Livermore's book, and although I found it an interesting read with some pointers providing cases why to follow TNA, I didn't pick up on exactly all the details and rules on how TA works. I will admit I raced through it at a time around when my first child was born, so I might have not been in the best frame of mind to absorb information, but there didn't seem to be an exact way to learn all the TA, unless the education must be paid by actually getting my feet wet by testing the market. I don't have a large desire to play in the market, as I also feel it is mostly rigged, and would rather place my money in PMs, but would rather better understand and anticipate the price of silver via TA as you do. Could you suggest some alternative books, sources for one to better learn the basics? Maybe I need to reread Reminiscences of a Stock Operator. Yes, you definitely need to reread Reminiscences of a Stock Operator. I think I've probably read that book at least 20 times and perhaps 30 times. But let's look at the silver chart just to give you an idea of technical analysis. Technical analysis actually is very, very simple. It's not complicated at all. Actually, let's go over and pull up the Apple chart to do that. One of the reasons I want to do that is because a lot of people have asked me about Apple lately, and Apple is actually in sort of a dead cat bounce right now. So a lot of people who heard my Apple call were asking me, when is the time to get in? Of course, I can't give technical advice, but we're, in my opinion, rapidly approaching the point where the fall is going to resume. We might get head and shoulders, and we might get another shoulder over here that equals this shoulder all the way up, and then head down. But just to get to the point about technical analysis, it's really fairly simple. The only thing you really have to understand is that technical analysis, just the straight support and resistance analysis, is based on the idea that overhead resistance is created by people who have a buy price that they bought in at, and they're showing a loss if the price is lower than where they bought in. Now, once the price rises above where they bought into the market, then there is no one showing a loss. So I'll show you on this Apple chart how that works. We can draw a few lines here. Let's go ahead and draw a line here at this breakout point. We'll draw another line at this point, and then we'll throw in another line at this point here. Now, the only thing you really need to understand about technical analysis is that all the people who are buying the stock at this time frame and at this time frame, and then especially at this time frame, there was no one prior to them who had purchased that stock and was at a loss. So there was no overhead resistance. Overhead resistance is prior buyers who were at a loss. So this area is a good area to analyze. There were a lot of people who bought Apple stock up here from 150 to 200 with a big correction that happened, and then it rallied, but it couldn't get through that, and then it shook a lot of those people out. A very large number of some of these people sold out here and gave up. And then finally it made a bottom based on exhausted selling, and it rallied exactly up to that point. Now, as soon as it crossed over this high price here, then as it began to rise into new high prices, there was no one left that was at a loss. In other words, from here all the way to there, everyone who owned Apple stock was making money. No one was at a loss. That is the essence of technical analysis. It's support and resistance, and it's based on human behavior. So I would highly suggest that you reread Reminiscences of a Stock Operator, and then if you can, go ahead and go to my Amazon store and pick up Market Wizards by Jack Schwager. The majority of those men who are self-made billionaires were influenced by Jesse Livermore. Most of them mention him and mention this book. So let's jump over to the story of the night. Don't have a lot of time to do that because I've already spent a lot of time. But this is the story about San Bernardino, California. This is from WealthWire. And if you remember, one of the city councilmen, actually the city attorney, told the citizens of San Bernardino, you need to lock your doors and load your guns. And that's because the police aren't going to be there for you. So let's read a little bit of this. The unintended consequences of San Bernardino's absurd government spending spree were on full display at a recent city council meeting. City Attorney Jim Penman explained that because the city is bankrupt and slashing public safety budgets, people will need to start protecting themselves. His advice: lock your doors and load your guns. It certainly wasn't what the 150 citizens who attended the meeting to address long police response times and rising crime rates, including 45 murders, wanted to hear. The violent crime rate has risen to 10.67 per 1,000 residents. That is compared to a 4.41 average for California and 4, which is the national median. Unfortunately, San Bernardino's irresponsible budget management leaves very few options for its imperiled residents. So that's all I'll read. I'll put the link for you to read the rest of the article. Now, I did a quick and dirty analysis of San Bernardino, California, and the big question is going to be, is San Bernardino, California a microcosm for the United States? And you better hope that it isn't. But I wanted to show you the employment breakdown. These are the top employers in San Bernardino, California. This is from the 2010 CAFR, so I can pretty much guarantee you that it's worse today. Here are your top employers in the city. California State University, that's government. Caltrans, that's government. City of San Bernardino, that's government. Community Hospital, that, I'm afraid, is government. San Bernardino City Unified School District, government. San Bernardino County Sheriff's Department, government. San Bernardino County School of Superintendents, government. San Manuel Band of Mission Indians, that's government. Stater Brothers Markets, there's a private enterprise, and of course this is a discount supermarket chain. I would guess that more than 50% of their revenues come from SNAP. That's probably mostly government. San Bernardino Medical Center, government. Wells Fargo, well, there's a bailed out bank. Omnitrans, that's going to be a San Bernardino County Transport Agency, that's government. San Bernardino County Public Works, government, and San Bernardino Valley College. So there's your microcosm of what you will have in the United States once Lindsey Williams' prediction comes true that everyone will be working for the government, and that's what you get when everyone is riding in the cart and no one is pulling the cart. You get bankruptcy, and that's what's coming to other cities in America. Now, I would suggest that there are some alternatives. The first suggestion is that if the people of San Bernardino are paying for police service, they should get police service and fire service, and the first priority of their tax money should be for those services. The bloated government pensions, they should be dumped on the PBGC. They should be dumped into the Pension Guarantee Corporation, which is bankrupt, of course. Just like private pensions are dumped in bankruptcy, just like San Bernardino is not going to pay the absurd payments to the state of California pension fund, CalPERS. This is the first city that said, we're not paying CalPERS. This is going to be a gigantic legal fight, but the most important thing is that they maintain fire and police services, and they should take those pensions and dump those on the Pension Benefit Guarantee Corporation and let the public workers suffer along with private workers. So back to the chart, we're rolling over in silver, and we may see a very good buying period. Eric Sprott is pointing out that he's having some interesting questionable delivery times now. We're going to do an update pretty soon here on the availability of physical silver with some of the main sites like APMEX, Tulving, Gainesville, and Provident. And we're expecting to see a point coming soon where the last silver ounce is available, and then we're going to expect to see an explosion up to that 50 price and then above towards triple digits. And we'll talk to you next time.